Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to today's Wednesday, the 17th of April, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. Go for our usual regular run through in here today. We'll take a look at the calendar. We'll look at the macroeconomic calendar, the data events that are potentially going to shape markets going into today and what we've seen over the past 24 hours. We'll take a look also at the earnings calendar, the micro calendar, what's going on the earnings front, what do we expect, and what we're looking for coming out today. We'll also take a look at some articles. We'll run through the articles from the major news wires, talking about all of these various events and factors that are shaping financial markets right here, right now. And we'll have a dip into the charts to see what's going on the charts. So first of all in here, the main event from overnight, from yesterday, was Fed Powell, likely to take longer to meet conditions to cut rates. Okay, so this is from the Live Squawk, the European briefing actually, from today. So do use that live squawk briefing. I'm continuing to flag it. It's below where I'm on right now. If you're watching this live or on the catch up, if you're on YouTube watching it, then you're not seeing it. But if you're watching this on live or catch up in the trade day members area, below where you are watching now, we have the three columns of reports. So we have the technical analysis reports, we have the macro fundamental reports from trade day, and then we also get the news reports, the briefings from Live Squawk, and you can also listen in obviously to the Squawk service from Live Squawk. So Powell relatively hawkish in here, I would say, continuing to put downward pressure on bond prices. Bond prices going to lower prices, higher yields, and then that's not positive, obviously, for stocks. Barking also, CPI data has not been supportive of a soft landing, so implying that we could be still heading towards a hard landing. Bank of Canada's McClellan in here, March CPI data shows the economy moving in the right direction. So, positive CPI data yesterday out of Canada. What else do we see? Bailey from the Bank of England, though, seeing strong evidence of falling UK inflation. We've had UK inflation data out also in here today. We'll take a quick dip into that. And then from Villeroy from the ECB to cut more in 2024 and 2025 after June. So still in anticipation of a June cut in here from the ECB. Let's look at the calendar first of all. So yesterday, as we said, it was more about Powell. And he was, I would say, relatively hawkish, maybe dialing back, but the market really dialed right back since the CPI data last week. Remember, the Fed goes into the blackout period. I've actually closed the tab, but I'll just quickly pop it back open in here. Fed goes into blackout period. The next Fed meeting we have in here is on May the 1st. You see in the red boxes there. The blackout period starts here on April 20th. That's this Saturday. So we only have today, Thursday, Friday for Fed speakers before we go into the blackout period. So important to continue to monitor these Fed speakers. Obviously, Powell yesterday, relatively hawkish, but the market always priced in the hawkishness, and we'll take a look at that as we move forward in here. Looking into today, we have had that CPI data in here, although kind of heading in the right direction. So previous CPI year-on-year data was at 3.4. It came in at 3.2, but the expectation was 3.1, so actually worse than expected for the CPI, even though it had dropped from previously, so not dropping as much as anticipated. So slight disappointment actually in the CPI data, although from the UK, although it's moving in the right direction. You can see in here the Eurozone data in here, all bang in line with expectations. Moving into the day, what do we have? Well, nothing of significant note. On the macro side from the US in here today, we do get some various Fed and ECB and UK speakers in here. So from the Bank of England, Schnabel from the ECB, Bailey from the Bank of England. Obviously not necessarily significantly impacting what you guys are looking at and trading, but it could impact into European exchanges, and European exchanges in turn could knock on into the US indices. So do keep an eye out. We do a Schnabel, Bailey today, and then also from the Bank of England, Haskell, and then Lagarde at 2 o'clock Eastern. But also then later on in the session, or actually in the post market session, Eastern time, 5:30 Eastern. Mester is speaking, 7:15 Eastern. We get Bowman speaking. Okay, so watching out for those Fed speakers. We do get European and UK central bank speakers throughout the US session going into today. There's the headlines on the UK inflation slows its fall, pushing back rate cut bet. So even though it was continued to fall, not falling by as much as I anticipated, so maybe rate cuts not coming as soon as we'd anticipated. On the earnings side, if we just step back into yesterday, and we'd already seen nearly all of this. A lot of this was already out when we came to market yesterday, so not really a huge impact from the earnings calendar. A little bit disappointing in here this morning. We have had data from ASML. One of the world's biggest chip producers in here. As you can see, slight disappointment here. Revenue at 562 and ASML lower on this, 562 with forecast at 597. So even though EPS beat, the revenue numbers missing expectations, and ASML down this morning in European trading. None of this really, I think, is going to really impact massively into what we're looking at in here today with the rest of the rest of the micro, the earnings data we have coming out. Tomorrow's a big one. After the bell, though, after the close, we get Netflix. Okay, Netflix, not only a huge corporation, but also a barometer, a measure of the global and the US the consumer, so significant to watch for that tomorrow. But for today, earnings calendar relatively light now going forward. So what do we have in here on Five Things to Start Your Day? The macro picture in here. So obviously Fed first of all, Powell yesterday, relatively hawkish in here. The dollar, though Treasury yields and the dollar actually easing back from recent highs, but still we have pushed a higher yield and we did see a stronger dollar. Eyes on earnings. US stocks are poised to follow European equities higher. So we did get some other earnings out of European. Adidas and LVMH led luxury brands higher, and also miners higher. Rio Tinto doing well as well out of Europe this morning. So European bourses higher and helping our markets as well. China Prime Minister is calling for higher tariffs on Chinese steel and aluminium. That's not good. European technology shares were on the other side, as I said in there. ASML posted new levels, fell short than analyst expectations, so disappointment from ASML. And just running through in here what we're coming up, which we've already done today. So Blunt Powell, excuse me. So the recap from Reuters in here: Blunt Powell signals rate cut plans on ice. So obviously that was not a positive if you're a bull. And here, stares shady, but bonds hit by Fed disappointment in here. Again in here, some negatives in here. Futures actually slightly bouncing in here with mega caps rebounding. Earnings, Fed comments on tap. So we've spoken about that. We've got those coming up today. The Fed comments. And stocks advanced, and again, this is on the overnight, this is on the futures. US yields jumped Tuesday after Powell signaled rate cut delays, so we've already spoken about that. The bond market's really reacting far more than the stocks yesterday to Powell's comments. Painful higher rates, wake-up calls. So it's all about the rates pushing higher. Wake-up call threatens global markets, global stock markets. That is, the US 30-year mortgage rate rises to a 4-month high. That's 3 through 7%, up to 7.13%. So again, all of this potentially a break on the economies, slowing the economies down with higher yields, and also then concerns of, echoing concerns of ongoing inflationary pressures. If we look on the overnights in here, the Chinese Hang Seng market in here, or the reflection of the Hang Seng of the Hong Kong market, a little change, but the Nikkei was lower with US stocks. But European exchanges actually rebounding this morning between 0.5% and 1.5% in here between the UK FTSE, German DAX, and the French CAC. French CAC driving particularly higher in here, up 1.33% on the back of LVMH in here. And if we look at on the overnights, we dipped low obviously yesterday, but we're rebounding on the futures in here this morning. It's jumped in here. So we're about 0.25% higher on the Nasdaq, nearly 0.4 up on the S&P. Turning back to the bond markets and the interest rates in here. So again, June, Really no chance now of a rate cut in June. We were pretty much nailed on for that rate cut pre the CPI data. Now an 85% chance that we remain unchanged for June, and now July. Very little chance, still a 58% chance that we still are unchanged on rates in July, and now looking for the rate cuts to come from September. The first rate cut now likely coming from September, but still a 32% chance we're still unchanged in September. And by year end now, remember the Fed only last month told us rate cuts and 3 rate cuts this year on their dot plot chart. Now in here, what's the favorite bet in here? Well, it's between 500, 525 to 475, 500 in here. That's either down 25 or down 50 basis points. So only two 25 basis point rate cuts now being priced into the market at best. Maybe only one cut in here. So very little chance now we're going to get more than that. We're going to deliver those 3 rate cuts. So we don't get the dot plot chart coming up at this next meeting, which is on the 1st of May. We don't get that. It's only every other meeting we get the dot plot chart. So we won't get that kind of reaction. But obviously the Fed speakers now dialing back. And we saw it from Powell yesterday on the expectations of rate cuts for now for the balance of the year. But I must say, even though stocks are significantly lower and we are down and we still remain bearish, compared to where the significant sell-off that we've had in the bond markets and where bond yields are, we're going to take a look at that now. Stocks are actually hanging in relatively well. They've actually weathered the fact that we've gone from... Now, remember at the beginning of this year, the market was pricing in 6 rate cuts. Now it's pricing in by the end of this year. Now it's pricing in 1, maybe 2, and stocks are still way up from the beginning of the year, and stocks are not particularly down. And we can see that if we look at where yields are here. So yields again yesterday, this is the 10-year yield going to still higher yields. And if we look where we are in yields, we're as high as we are since over here. So this is November, okay? This is November of last year. So we're at the same level on 10-year yields as we were in November. And look at the bond market, how we've continued to sell off. We accelerated down last week. Whether you look at the 30-year, 10-year with that acceleration down, and we've continued lower after that big sell-off. Look, there's a 5-year on the CPI. Obviously, the short end, more susceptible to interest rates. So we have a significant sell-off. Not 2 years, actually not pushed that much lower, but 5 years continued down, and 10-year and 30-year continue to go lower. If we look at what stocks have done since then, though, since CPI, yes, stocks are down since CPI, but then and down again significantly, but holding in. If we look where we are, we're back to on the S&P, we're at levels seen in February. Remember, bond yields are down at November levels, okay? So we'll be back down here, okay, to be the equivalent. So stocks are actually holding in relatively well. If we look at the NASDAQ, we're at levels, that's yesterday, we're in a topping pattern. Got a slight bounce yesterday. Yes, we had a significant sell-off down through support prior to that earlier this week on Monday. We've got a topping pattern in place. But where are we? We're at the same levels as we were. We're at the bottom end of where we've been, since really February, March in here. Okay, and we were only at these levels back in here in the middle of March. Okay, so we're not that much off the highs. However, you look where we are on the bond market. So the stock markets are actually hanging in, holding in very, very well. So on the longer term, the damage has been limited. Yes, on the short term, it's still bearish, right? I'm not denying it's still bearish, and we carry a bearish tone. And on bearish, you look in here, on the reports, we're bearish. But compared to what we're seeing on the bond market, the stocks are holding in relatively well. So any kind of respite in bonds, if bonds can turn around slightly, we could easily get stocks starting to make a rebound in here. So a quick look on the charts. Yes, we stay negative, but I think if we can clear back above some short-term levels in here on the upside, so just watching out for a rebound today. That's what I'm just a little bit cautious of. We kind of got this bottoming pattern yesterday. We chop yesterday. If we can clear back above the peaks in here, there's got resistance. Got this top of this candle here and this one over here. So we're talking about this is on the ES. If we can clear back above 51.23 to 24 area, 51.23, 24, 25. I think we could see a base going here, and then we could see some kind of consolidation rebound in here. And NASDAQ in here, similar kind of thing, right? We got the chop yesterday, big sell. This looks like a flag pattern, so it could be continuation. But if we can clear back above, again, it's just really yesterday's peak in here. If we can clear back above yesterday's peak, that's up at just below 18,000, right? If we can clear through 18,000, then we could get a little bit of a short squeeze in here. We might get some buyers coming in, some value buyers coming in for various stocks, and we could see markets pushing higher. So just watching out for that. As bearish as I am, I think we could see a little bit of a short squeeze go on in here today. So just watch out for that. If we clear above yesterday's highs on the Nasdaq or the S&P, I would not fight it today. I think we could see a little pop higher. If we can't clear the highs, then it's, this looks like a flag pattern and we just go lower. But just be wary of not trying to fight if we break above yesterday's highs. That would be my guidance going into today. Right, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care and stay safe. And I'll be back with you with another bull versus bear webinar on Thursday. Bye.